Hey, morning, everyone. Welcome back to our morning cuppa at 8. Right. So yesterday, what did we look at the market was this US crude oil have a very strong selling pressure, right? I think at about 8 p.m. our time, right, during the Euro market, right, initially the WTI crude staging a rebound, right? But when I look at it this morning, right, it actually closed lower. So this WTI crude have a lower low closing right now, and you can clearly see that um there's a weakness in the technical setup, like what I wrote in a report yesterday, right? This bearish candlestick does flash a weakness on the technical setup. Hence, I do not discount possibilities that the WTI crude may coming week, right, breach the $90 per barrel level, right? At this juncture, I still keep a bullish bias, but I set my stop loss point at the 90. Hence, when the crude oil have fall yesterday during the US sessions, you can see that the Hong Kong market actually have a rebound. Now, although the Hong Kong market rebound in the evening sessions, right, the Hang Seng Index remains below this 20, 50 days moving average, and the 26600 point level remains intact. So I think overall, right, despite that, recently we see that Xi Jinping have been meeting the Trump and also Putin recently, right, the sentiment remains cautious at the equities market right now, right. The technical setup remains bearish on the Hang Seng Index. Meanwhile, yesterday night, another instrument that I noticed is the gold. Right. Usually when the oil price actually have a corrections, gold we have a very strong rebound. But yesterday, you look at the gold price actions, it did not manage to rebound above the 20 days moving average. The momentum remains very weak on the gold. So this tells us one information is that the um, right now market is looking at the bond yield. In fact, the bond yield have rising at a faster rate than the inflations. As we understand that right now, right, the oil will create some inflations. But the main culprit or main thing that market is looking at is the bond yield. What is the 10-year bond yield going to be at the end of this year, right? Especially the new FOMC chairman, right? That's coming, taking over Powell, right? What's the next meeting in the June is going to be, and what's the market expect the 10-year bond yield to be at the end of the year. So when the bond yield actually moving faster rate, right, you can see that the 10-year bond real yield, the bond yield minus the inflation expectations, that has suppressed the gold price. So that's what actually the market is looking at right now. Now, yesterday when the another thing that we look at is that the when the oil price market oil energy stocks are pull back, right? Funds are going into the non-energy stocks. Can see that yesterday night, the a very strong rebound on the tech sectors led by the LITE, right, and also the Sandys, right. The apart from Nvidia have a correction yesterday night, right. Most of the US stock have a technical rebound yesterday, right. So I think the market is looking at the non-oil counters right now. As for the FKRI, right, remains on a corrections mode yesterday, right, pulling back towards a few days moving average. I think that today, since the sentiment has become much better at the US, right, the index may stage a rebound near the 50 days. Now, the next support level will be 1690. So I think that from here, 1712 to 1690, this is actually a very good band for a rebound play on the FKLI, right? Still keep a bullish bias until it breaks below 1690. Now, as for the FCPO, right, it just can't break past the 4007. So yesterday, the upside movement was blocked by the 50 days moving average, a very long bearish candlestick that we see, right, profit takings that took place yesterday, right? Riding on this momentum, right, FCPO may also pull back towards 4,000, 43990, right, in tandem also with the weakness on the crude oil price. Yeah, so we still keep a bearish bias on the FCPO, and we keep our stop loss at 4,007 and change. Now, meanwhile, yesterday, right, the market continue to look at the tech stocks, right? Counters like Unisem, Vitrox, Penta, UWC, MPI have a very strong rebound. Together with the newly listed Skychip also went up by 5% yesterday. It looks like the tech stocks momentum is going to continue today. Together with some of the blue chip stock may see a mild rebound this morning. So as for the trading stocks today, we're looking at Synergens that break past 52 cents resistance on the back of high volume. Next level will be 58, followed by 62. Downside support is 48. Then on Malaysian flour mills that have published the result recently, they are going to the stock have break past 58 cents, heading towards 61 and followed by 63. Downside support is at 56. So we have Synergens, followed by Malayan flour mills. Both are breakout stocks. So I'll stop here and pass on to the next presenter. Thank you.
Okay, good morning, everyone. We have a results review for Kerjaya Prospect's first quarter 2026 results, which saw a core profit of 62 million ringgit, which was about 40% year-on-year higher, which is if not mistaken, I think it's probably a quarterly record high, based on what I've checked. And and just to bear in mind, despite revenue for the construction arm being lower, PAT for the construction arm was very strong. I think 7% year-on-year higher, and margins was at about 14% compared to about 12.8% a year ago. And the reason being is that there was some finalization of accounts being done, so that actually helped to recalibrate the overall margins for construction. In terms of the order book, now stands at about 4.3 billion. Year-to-date wins are at 1.1 billion versus the 2 billion ringgit target, which we view is still reasonable to be achieved, given that for example, ENO is likely going to launch the commercial waterfront project, which is about 700 million, and they have got one of the high-rise projects in Andaman Island, which is Avia. That is about 1 billion GDV. So 1 billion plus 700 million GDV, you've got 1.7 billion GDV that has yet to see the main construction works being awarded. So you take 40% out of that, you're going to have about 680 million ringgit worth of potential construction value. And maybe perhaps the remainder could come from third-party projects, which Kerjaya has been slowly winning. For example, you've got one of the hospitals in Seremban, along with some development from IGM in Seremban also. And they are also in the midst of tendering for a data center project. So, that pretty much looks intact. In terms of cost, we think that, Kerjaya naturally has always been very prudent in terms of how they, price their quotes for the clients. So we think that, headwinds from the higher material prices should be fairly mitigated. For example, the reclamation for the second phase of Andaman Island, that has been accelerated to the point that it can be completed in 2027. It was just awarded sometime last year, so that could help a bit to avoid the higher diesel cost that is needed to reclaim the island. So all in, given that earnings were within our projections, we make no changes, but we do roll forward our valuation based to FY27 from FY26. Hence, we derive a new target price of 3 ringgit and 15 cents from 3 ringgit and 11 cents previously. So next, I'd like to move on to KKP Engineering, which saw a core net loss of 4.5 million from 1.5 million loss a year ago. This was due to some timing mismatch, given that order book as of end of last year was at less than 100 million, but they have just secured a 200 million offshore fixed structure contract early this year. So that particular project is still at the early stages. So that led to the lower revenue for the quarter. But we understand that outstanding order book is currently at 330 million ringgit, while tender book is at 1.3 billion ringgit, comprising various types of projects from supply of steel pipes, water supply projects, and also oil and gas structures. So given that results were below expectations, we lower our earnings by 14, 9, and 6% for FY26 to 2028, and derive and also roll forward our valuation base to FY27. And because of that, we derive a new target price of 1 ringgit and 45 cents from 1 ringgit and 42 cents previously. So that's about it for from my end. I will pass on the floor to the next speaker, Jeff.
Okay, we move on to Telekom Malaysia, TM. This is the first quarter results. Core net profit basically up 20% quarter on quarter, 11% year on year. This was basically on lower financing costs and seasonally higher OPEX in the preceding quarter. So the numbers are about 25% of forecast, consensus about 24%, so broadly in line with expectations. They declared a 6.5 cents first interim dividend. This is actually payable on 25th of June. If you recall, this is actually as per their new dividend payout policy, which they've announced a couple of weeks earlier. The payout policy is 78% minimum of reported PATAMI. So do expect some volatility in terms of quarterly payouts. They will be paying a 4 stream of dividends per quarter. So that's every quarter versus the semi-annual payments before. Now, this particular quarter, there's been a write-down in terms of the 5G prepayment. This is amounting to about 127.3 million. It relates to the prepayment for 5G wholesale costs that they forked out for DNB. And, just about towards the end of February, they've opted to actually cancel that wholesale agreement. Obviously, the whole process is still pending. We're not sure whether that cancellation will go through. I think the parties are now in discussions together with FCMC to resolve differences. An amicable solution is being sought, but there could potentially be an exit penalty due to the earlier cancellation. We'll just need to have to monitor this development very closely. At the call yesterday, management was fairly tight-lipped in terms of developments on this particular front. Operating metrics wise, I think if you look at internet revenues, was marginally lower Q on Q. Obviously, a bit of seasonality here as well. Sub numbers was steady, 3.2 million in terms of fiber broadband subscribers. ARPU was down slightly. Again, seasonal effects here. The TM global business, which is the wholesale business, on a down as well, 21% Q on Q. That's really coming from seasonality as well. There was a bit of lumpy recognition in the previous quarter. Enterprise business saw a bit of an uplift. On a year-on-year basis, it actually grew. This is actually the first rebound since third quarter. They are actually hopeful of more contracts coming its way sometime in the second half. Enterprise digitalizing contracts and a bit of the DC side of it as well. On data centers, I think if you look at the expanded capacity over at Iskandar Puteri and Klang Valley data center, they should be actually getting a lot higher utilization into the second half of this year. So the contributions from the DC side of things, managed services, the storage side of revenues will also increase. Just want to flag that the JV with Singtel for the AIDC over at Iskandar Puteri TM Nexera, it's due to be ready for service sometime in the fourth quarter of this year. Based on our discussions with Singtel, that particular facility, phase one, is about 64 megawatts, 60%, more than 60% of that capacity has been contracted. So that's very good news for both TM and Singtel. Forecast-wise, we've made no changes. It's still pretty early part of the year. I think earnings will pick up course over the next couple of quarters. So target price is unchanged at 9.30. This is still one of the preferred picks within the telco sector. At our target price, the implied EV/EBITDA being about 6.6 times, which is pretty much in line with their historical EV/EBITDA. Catalyst would obviously be stronger earnings ahead. Dividends, of course, there's actually a lot more upside for the fact that the balance sheet is under-levered, and we think that potentially there may be a special payout as well. We factored in a 4% ESG premium into our 9:30 stock price. Okay, that's all from us for today. We'll see you again at Monday's morning couple next week. Have a good weekend. Thank you.